When buying property in Portugal, it's essential to have a clear understanding of the taxes that you will need to pay. Well, if you're relatively new to the world of property taxes in Portugal, you're in luck. Today, we're going to provide you with a complete overview of the taxes you'll need to be aware of when snapping up property here in Portugal. Hi there, my name's Amy and I'm a buyer's agent at Goldcrest, the first independent property buying service in Portugal. At Goldcrest, you the buyer are our primary concern, not the seller, and we will always negotiate the best possible deal for you, ensuring that you have the latest market intelligence and innovative valuation methods to make an informed decision. So, property taxes in Portugal. Where should we begin? First things first, you should be aware that there are taxes that you'll need to pay at the time of purchase and those that you'll need to pay on an annual basis. You should also know that the foreigners are charged the same property taxes as Portuguese citizens, with some taxes varying depending on whether the property will be your primary or secondary residence, the property type, or the location of the property, for example, if it's in an urban or rural area. So, without further ado, let's jump right in. When it comes to the taxes that you'll need to pay during the buying process, the crucial one is the IMT, or property transfer tax. This is a transfer tax that is applied to the property purchase and ranges from 0 to 7%, depending on factors such as the property type, value, location, and whether it will be your primary or secondary residence. Alongside this, remember stamp duty, one of the oldest taxes in Portugal. When it comes to property transfer transactions, expect to pay a stamp duty of 0.8%. Once you've purchased your dream property, whether it's a stunning beach villa or a chic modern apartment in the city centre, you'll still need to be aware of the post-purchase taxes that you'll need to pay on a yearly basis. You'll be glad to know that there aren't too many taxes that you'll need to worry about. IMI, or municipal property tax, is the biggest one, an annual tax that each property owner in Portugal is subject to. Each municipality has a separate tax rate, and it is the municipal legislation that set their own rates. Generally, the IMI ranges from 0.3 to 0.5 for urban properties and up to 0.8% for rural ones. Also, please bear in mind that the IMI is levied on the property tax value and not on the price that you paid for the property. This is a big win for you, the buyer, as the tax value is normally much lower than that of the market value of the property. Should you be buying property worth more than 600,000 euros, there is an additional tax you'll need to be subjected to. AIMI, or the Portuguese wealth tax, needs to be paid at a rate of 0.7% for properties valued between 600,000 and 1 million euros, 1% on properties valued between 1 and 2 million euros, and 1.5% for properties valued over 2 million euros. And that's pretty much it when it comes to the taxes that you'll need to pay at the time of purchase and on an annual basis. It's not so bad, right? Now, moving on to the taxes that you'll need to know about should you ever be looking to sell your Portuguese property. This one is capital gains tax. Simply put, if you're looking to sell your property, the profits you make when you sell are liable to tax. You will need to disclose in your tax return the year in which the house was bought and the respective price that was paid to acquire the property, alongside the invoices of any works that were done on the property, which will be duly considered in the capital gains assessment. Bear in mind that there are exemptions where capital gains may not be subject to tax. This is the case if the total selling price is reinvested into a new home in Portugal. The house that you are selling will need to be your permanent residence and will need to correspond to your tax address. This exclusion from the tax will also depend on the timing between when you sell your property and when you purchase your new one. Yes, we know it's a little bit complicated, but basically, you will have to purchase a new house and reinvest the total selling price 24 months prior to such a sale or 36 months after the sale. And finally, the last tax we're going to delve into is relevant for those that are looking to secure a lovely return on your investment by renting out your property. And with high yields in many key areas, both long and short-term rentals are excellent options. There are certain differences that you should know about should you be looking to rent out your property on a short or long-term basis. For example, with short-term rentals, you'll need to secure an alojamento local or AL license to rent out your property legally. As a general rule of thumb, tax on rental income stands at a flat rate of 28% for non-tax residents, although there are certain tax deductions that could be applicable to you, such as for fire insurance, costs with obtaining the energy certificates, and maintenance costs. But remember, you'll need to present the invoices and documentation of any work carried out on the property to the tax authority to unlock tax deductions. And that's all we've got time for. I hope you're now up to speed on all things property tax related in Portugal. Don't forget, if you'd like more information on property taxes in Portugal, head over to our article on the topic for a comprehensive overview. And if you're looking to kickstart the process of buying a property in Portugal, our team of experts are ready to get the ball rolling with you. Get in touch with us today. Also, don't forget to hit like and subscribe. My name is Amy, and this is Goldcrest Insights.